So it's been a tense session, not any sense of panic, despite really another shocking read on inflation. And it feels like folks are more afraid of missing out than getting wiped out. So, of course, I get it. I mean, that approach has worked like a charm since March of 2009. Will it continue? Joining me now, Market Watchers Gary Kaltbaum, along with Michelle Snyder. Let me just get your general thoughts on today's action, starting with you, Gary.
The NASDAQ was up 13% over the last 20 days. The semiconductors were up 20% over the last 20 trading days. Pullbacks are normal, but I have to tell you, you're getting some good excuses for it. That was one ugly inflation print today. And now you very much have to continue to watch the 10-year yield, which has spiked up today. If it really gets going to the upside, that could affect markets, because the one big thing that could be out there is if the Jay Powell can no longer control yields and they really start to back up, that affects the economy that already has an inflationary spike, and that'll affect the market's valuation also. So the bond market yields are on notice right now, especially, I have to repeat, that was one ugly inflation number that came out.
We got you. You know, it was always amazing to me, Michelle, is when the numbers come out as news on Wall Street and everyone at home is saying, I could have told you that. You went to the supermarket with me last week. I could have told you all of this stuff. Exactly. Gary makes the point, though, that I think NASDAQ was up like 11 days, S&P. Obviously, you know, these sort of sessions were due. And it's been tight. I mean, we're sort of going down, but we're not even necessarily free fall. What do you make of the overall resolve of the market?
Well, right now we're holding short-term support, so as long as we don't get any kind of free fall from here, we could see buying coming back in. I just want to pick up on a point about the rates, though, because the yield, the Fed fund rates or the short-term rates, the gap between that and the CPI numbers were at the widest that they've ever been, even beyond the 1970s. So that's why you have to watch these long bonds so carefully, and particularly how the long bonds perform against the SPY. We already know they've been underperforming against the high yield debt, which of course is a risk off situation. But right now they're on par with those SPYs. So just like what Gary said, what the Fed does from here is so key in terms of how aggressive they become or not. And so far, this is what we're seeing, is the dovish activity has helped. And so unless there's some kind of a sea change, this could be just a healthy correction after a very big rise with no real correction up until today.
And we know that, of course, there's a big push against any kind of sea change. Of course, you both know I love all the exciting things happening in this world, particularly this country in finance, technology. I think we're creating amazing individual opportunities, perhaps a once-in-a-generation opportunity. But with these new companies that are unproven, it's always feast or famine. I want to give you an example. Last night, the earnings came out for a bunch of companies, Gary. And the question is, how does an investor, because you play some of these names, how do you get in the names that are up 25% today and avoid the ones that are down 25%?
Close your eyes, hold your nose, and pray. Look, earnings, I call it earnings roulette. You really don't know. But what you've got to do is find those companies you basically can depend on quarter after quarter. And unfortunately, there's been a lot of IPOs in the last 2 years of companies with great sales growth, but continue to lose a lot of money, and you never know when they're going to come after them. So you just got to be very, very careful during earnings season. Again, it's all about dependability. Find those companies that every quarter, big earnings growth, big sales growth, and good reactions, and you pretty much know what they are because you talk about them all the time. By the way, you mentioned the individual investor. I had to mention to you, Charles, another tour de force town hall yesterday by you. You are definitely a man behind good Americans trying to do well for themselves.
Thank you so much. You're a very classy man to say that, as usual, really. Michelle, let me pick up on that, not the classy part. The
I agree, though.
The IPO part, right? Because we had this electric vehicle maker, Rivian. They started trading today. I mean, it's an absolute beast. The biggest IPO since Facebook. Would you be a buyer of something like that? Would you chase that out of the gate?
I never do that because there's always opportunities. This whole fear of missing out thing is not something that we ascribe to here. So I like to see price history. Now, is Rivian sexy? Absolutely. Is it well backed between Ford and Amazon? Absolutely. But we can see that nothing is immune to a market correction. It opened up high, it's already selling off. Let's give it a few days to see what happens. I mean, we do have some concerns there like we would with any EV company, although they'll get a boost from the infrastructure package in terms of charging stations. We still have a chip shortage. Can they deliver the pre-orders? So to me, I would wait.
All right. I would wait as well. Gary, Michelle, two of the best. I'm glad we started off with you. Wish we had more time, but thank you very much. Very, very critical information.
Thanks, Charles.
Meanwhile,